This is not financial advice. This is purely for educational basis. So make sure you read the disclaimer. This is one thing that we'll keep coming back to, because I want you to put this lens whenever you're looking at any theme or trade idea. So firstly, what's been driving the stock in the last 6 to 12 months? So what's the history behind the stock and its industry? Why has it been trading the way it has been? And secondly, what's changing now and how could that affect future expectations? So as traders, we are looking at a 4 to 10 weeks trade horizon. Therefore, this is a portion that we have to focus a lot more. Within this segment, you'll see catalysts, you'll see a lot of ideas, and we will have to ask ourselves if that's actionable, first of all, and secondly, whether this will affect future expectations. And lastly, as we're putting everything together, we need to ask ourselves if the market is already recognizing these changes in the industry or the stock. In other words, is it already priced in? Moving on, so I'll hand over to Team Long. I think Bhavan, you were the one who were captaining the ship there. So feel free to run us through your idea here, or your team's idea here.
Yeah, Roshan, like I think I got the idea from Callisto, and I think that's his name. Hopefully, I'm not butchering it. And then also I expanded on that, especially for the food, beverage, tobacco products. Like you said, this is like the very early first step of like identifying your theme from ISM index, right? I haven't gone into the stocks yet. So it is straightforward, like coming from, we picked it because of that month-on-month change in food and beverage and tobacco products in ISM new orders. And then also this commentary that I have highlighted here, especially the commentary that says a record sales volume for 2024. And from there, like we also have in the Discord server a value chain breakdown of restaurants. So I was trying to think about that in the value chain, who will be benefiting if the sales volumes is increasing in this industry for the players in different parts of the value chain. So I identify food distributors and wholesalers. Like I said, I haven't individually gone in and seen what has been happening to them, but hopefully they will be more. They will be giving more. They will be distributing more food. Obviously, when you have your sales increasing for the restaurants at the end of the value chain. And packaging manufacturers. So I identified there will be manufacturers that will be helping with food containers and paper packaging for this food composite what do you call it, packages for food. And they identified two players there. Sealed Air has a little bit more exposure to the food industry, so I highlighted them. And technology partners, I think we talked about it in the value chain. These are the POS and payment process system, payment orders one is, and then also there's the payment process like Square and others. So I identified them, like they will be directly linked to the number of sales or volume of sales that companies are charging, or the number of transactions, sorry. And finally, the alcohol and beverage company, this will be like direct beneficiaries. When you sell more food, you also sell more drinks and alcohol. And I identify Coke, Pepsi, and there's another player, SDS, STC there. So that is the thought process here. And then I think this is coming from the manufacturing index. And then we also had another idea that is coming from Callisto. I haven't done enough work there, but
let's maybe pause here because I want to dissect this idea a little bit, right? So when you look at financial markets, you have two broad types of stocks, cyclicals and defensives, right? So the food, beverage, and tobacco products, within that segment, you can have both types of companies. For example, if you look at restaurants, they tend to be a little bit more cyclical. So restaurants would tend to be packed when people are doing well, as opposed to, let's say, tobacco products or some of these other like food distributors, especially the ones which are serving clients who are based in healthcare. So these would tend to be a little bit more defensive in nature. In that, what does defensive mean? It means demand in that segment is not that much correlated to economic growth. So if we have a recession, for example, the number of meals that have to be supplied to, let's say, a hospital or medical laboratory or businesses that are involved in these types of activities would not necessarily fluctuate that much. It would not go down significantly. However, the activity levels for restaurants might go down quite significantly, which means if you're supplying any form of products, whether it's commercial kitchen equipment, food products to restaurants, these would tend to suffer quite a bit because the value chain will be affected from consumers not eating out that much in a recession or not spending as much as before in a recession. So that's one thing I want you to keep in mind. Because as you find these ideas, what we've got here at the top of the slide is literally identifying a theme. So from that theme now, depending on how you want your portfolio to be biased, whether you want to have more cyclicals than defensives or vice versa, you might want to skew your idea generation from that perspective too. The theme is there, but it doesn't mean that there will only be one or two trade ideas that come from this theme. There are multiple trade ideas that will benefit from this theme, and it's for you to decide which candidates fit your portfolio at that point in time better. If you have a portfolio that you're building from scratch, you have a little bit more choice, and then it becomes more of a subjective play for you in terms of whether you think cyclicals would do better than defensive over your trade horizon. But if you already have, let's say you have 8 positions in your portfolio, you're looking for an additional to add to it. Let's say you have a slightly heavier weighting on cyclical stocks, and you want to balance that out with a defensive type of idea, because at the end of the day, you are looking to diversify across your portfolio. So then you might want to look at idea generation slightly differently from that perspective, in that you will tend to go into these segments that you believe are defensive or a little bit more defensive in nature. So that's one thing I wanted to share with you, because I think this gives you another lens to look at this whole idea generation process. It's not something that I can discuss from the first webinar itself, because you have to build onto this and kind of get your feet into the water, and then eventually you will have appreciation for that level of depth that we're discussing now. So that's one thing. Secondly, when I read this comment, the second half of 2024 is trending upward enough to more than compensate for the year-over-year losses. If you remember my comment before about the trader's thought process, right? This is clearly establishing to us what the history of the industry has been like. So the first half of 2024 has literally been a bit of a correction period for the industry. Of course, it's not going to be the same across every single company. So we'll have to identify or kind of take a guess as to which segment this commentary is referring to. It could be in terms of food, it could be in terms of beverage or tobacco products. But what this commentary is also telling us here is that things are changing and they are anticipating an increase in sales volume for the rest of the year. And this is a great catalyst for us as a trader, because we always want to be on top of these things, right? Shifting trends, shifting expectations, which will also cause capital to shift, right? And this is where we get involved, and we want to identify the right candidates that will benefit from that whole shifting trend. I wanted to just check one thing, because we need to put everything into perspective, right? So if I look at the food, beverage, and tobacco products sector here, over here, yeah, I mean, I can see why they are saying that it's been a difficult start of the year, right? You can see the contraction here, right? From January all the way to August. And then September appears to be a little bit like green shoots, right? And that's in the new orders segment. So this is great because new orders is predictive in nature. However, I also want to look at what's actually happening at the moment. So I'm going to look at the production index. So this gives me a little bit of an overview of what's the current state of affairs at the moment. And it will kind of give me an appreciation of whether the catalyst that we are in search of, or the trend that we are trying to play, whether that's actually happening or going to happen in the next month, or is that like a 6-month story, right? So, of course, we're not going to get straight answers from looking at this, but this is going to give us a very good complement to the whole thing, and we can form our own view in terms of timing the idea. So if I look at the production index, start of the year, it's not been that great. Again, contractionary for a few months, then stagnation in August, and then we're starting to see green shoots in September. So it's kind of aligning, and it's a very good sign. And of course, next week we're going to have the ISM manufacturing for October, so we'll be watching out for this quite intently. And what you ideally want to see here is basically another month of expansion, right? And more so, you want to see that being replicated here as well. So you want to have a new order ranking that's relatively high and kind of hinting towards a higher rate of expansion. So from an industry level, I think this checks out. And you can see how I'm thinking through things, right? So that's kind of giving us a lot of confirmation signal that the trend that we're looking at is not just something we've made up, and it's actually something that's a little bit more tangible, but also that timing-wise, this is the right moment to be looking at these companies and to be finding these candidates and trying to play them, maybe going into earnings or any other catalysts that we might foresee across our trade horizon. Right, so that's my feedback on this segment. Now, in terms of how you discussed, what could be the potential avenues or companies to play this, I quite like this breakdown. Of course, within each segment, you have different dynamics, and you have to go and figure it out. When you talk about, let's say, packaging manufacturers, you can also add, there's a company called, with ticker name BALL. So these guys manufacture aluminum cans. You would ask me, how is this even remotely related to what we're discussing? But if the beverage segment is experiencing an upturn, you can clearly see how that could translate into more upside for a company that's manufacturing aluminum cans, right? Because a lot of this beverage is supplied through cans, and if you're selling more, you're also going to be placing more orders for aluminum cans. So this is something that's just coming at the moment. I have not looked at it, I haven't checked it out or anything, but it's for you now to kind of dig a little bit deeper and figure out if there's a bit of upside within that segment too. When it comes to the beverage industry, you have to probably separate it in two now. One is alcohol, and the other segment is, or sub-segment, it's the non-alcoholic beverage segment. And the reason I want you to separate the two is because the non-alcoholic segment, sub-segment, is actually growing quite rapidly. So in recent years, we've had companies like Celsius, especially you've got like Monster energy drinks and so on. You've got quite a few brands that have been growing quite significantly in size, and it's quite surprising when you see the rate of growth of these companies. A lot of them, maybe you're not familiar with them because they're not they're not like something that you would be buying personally. But if you're trading, let's say, small caps, mid caps, you would be very well aware of names like Celsius Holdings. There's a few others that are not coming to mind now, but there's quite a, it's like a multi-billion-dollar industry, and it's probably something that we have to maybe look into and understand whether there is more room for growth for these companies. In terms of food distributors, I think a couple of the names that you've mentioned here are a little bit defensive in nature. So I've looked at, I think SYY, I'm not sure what's the full name, but I've looked at it and USFD as well. Both of them are slightly defensive in nature. And they also trade at relatively low PE values. The reason for that is because they don't necessarily grow their business that significantly. It's also very low margin business. So if you look at the net income margin, it's likely to be around 1 to 3%. And that's a business that not a lot of people want to own. But if you're able to grow that segment and maintain the same margins or even improve the margins from there onwards, then that creates a bit of upside for the equity. And often we tend to look for these trade ideas where the companies are not necessarily that much in focus. They're not popular names with retail investors, but under the hood, there's a lot of good things happening. And as revenue increases, you have better coverage of fixed costs, which eventually causes your margins to go up slightly. So imagine if you're making 2% in terms of margin. If that goes from 2 to 3, that's a massive growth. And you don't necessarily need a lot of revenue growth to be able to achieve that type of operational leverage. And this is the concept that we introduced last week, in that as revenue is growing, costs of the company are also not growing at the same pace, which means that revenue is growing faster than cost, and eventually the excess is trickling down into the bottom line of the company. As traders who are looking for long trade ideas, we want to find these ideas where the EPS growth in the future will be higher than what estimates are currently. And these are the type of situations that will present you with very good long ideas. And even if you get it wrong, maybe the stock doesn't move that violently, right? So if you get the thesis wrong, you can unwind the trade at minimal loss, and even better, maybe you establish that this trade is not something that will play out over 3 months horizon, and you think that it's probably best to give it 6 to 9 months time horizon. As an exception, you can have that play in your portfolio. You're not an investor per se, but as a trader, you've made a very deliberate decision to have an idea that has a slightly longer trade horizon, and you're still playing it with options. Let's assume that. The benefit of these types of companies is because they are low PE, low beta, and at the same time would tend to have low implied volatilities. You would be able to buy these options at a relatively, let's say, cheaper premium compared to if you want to buy, let's say, Celsius Holdings, which is a lot more volatile because it's growing its business much quicker. It moves a lot, both on the upside and downside. So that gives you a very different spectrum of ideas that you can start looking at. You could, within this segment, you could look at high PE, low PE, and find very good long ideas in both segments. And it all comes back to, what does my portfolio need at the moment? What type of idea does my portfolio need? If you're overweight longs and they are relatively high PE, let's say you've got a couple of stocks in AI, a couple of stocks in, let's say, high-flying restaurant names, the last thing you want to add is, let's say, Celsius Holdings to your portfolio. You probably want a little bit more of a boring company that no one's really looking at, but the company is executing really well, and then there's a tailwind that comes through that lifts it up a lot more. And when investors start paying attention, they're like, oh, look at this revenue growth, look at this EPS growth. Why is it trading at such a low valuation? This is definitely a buy. And then these guys come in and they lift the prices. And that's basically what we would call within the industry, the company gets re-rated upwards. What does the company do? Supplies aluminum packaging for the beverage, personal care, and household product industries. Okay, so the reason why I think this is also a good story to look at is it's not particularly exposed to either just alcoholic or non-alcoholic drinks. So it gives you, a way to participate in both segments. And it's a relatively simple business to pick apart. It's not very difficult, right? Like you have raw material costs, manufacturing costs, and then it's a question of whether you're going to sell more cans in the future or not. If I look at the share price itself, let's just quickly look through this. So it's not had a great moment in 2024. If you look here, the revenue estimate has gone down significantly, but the share price just couldn't care, right? Because it was also growing EPS at the same time. So the promise of EPS growth has held up well, even in towards the later end of 2024. So investors were right to not sell off the stock here as revenue was going down. So investors must have figured out that, the company has the right type of levers to be able to pull in a situation where revenue goes down. And I think that's relatively clear here, right? So, if let's say as a trader, you were here in 2024, and then you see these large projections for revenue decline, and then you decide to short the stock, you would have lost money because you were not paying attention on the levers that they still have to pull on the EPS. So I quite like this story because I'm not sure what led to this EPS growth here. It could be cost cutting, right sizing, maybe aluminum has gone down in price. And so basically if the raw material goes down in price, you have higher margins, right? Which leads to higher EPS. So the reason I really like this idea now is because there's not much bend into revenue growth expectations, right? But what we are seeing is probably leading us to believe that there might be a marginal tailwind for this company. If we're going to have an expansion in the beverage industry and this company is going to benefit as a result, this blue line could go up a little bit, right? But when this blue line goes up, a lot of good things have already happened in the business that's kind of leading it to run at higher operating margins. So we have to figure out whether the higher margin here is down to raw material pricing being up and down, because that's not a factor that's in the company's control, or whether this margin growth is particularly due to actual measures that they've taken in terms of cost cutting, laying off people, making the operations a lot more efficient. It could also be that they've been buying a lot of their shares back, and by virtue of that, EPS has gone up. So maybe net income has gone down or stayed flat, but earnings per share has gone up because they've got lower number of shares that you're dividing the earnings by, right? So there are all these factors. I don't know what exactly has happened. You will just have to go into the company, look through it, establish what's happened, and this would take you maximum 10 minutes, and then you'll be able to decide whether this is a company you should explore further or whether you should just drop the idea. I have a very good feeling about this as a long idea, to be honest. Particularly if there's inflection in the revenue here, this is just going to go through the roof, right? At the moment, it's got a 20 times forward PE, so maybe slightly high for a company of this nature, but also I think the market is taking into account this EPS growth lever that they've got and maybe giving it a little bit of credit. So 19 times is not out of whack though, because the S&P itself is trading at, let's say, around 24, 25 times. So relative to the S&P, it's maybe a bit lower, but it's also not like massively low, right? It's not like 5, 10, because then we'd have to ask ourselves, why is it trading at 10? Why does the market want to buy it at a discount and not at a premium? In this case, the market is giving it a valuation of around 19, which compared to the S&P is a discount, but maybe if we compare it against its peers in the industry, it might be a premium over those companies. So that's how I would look at this at the moment. We can quickly check a few things that I've mentioned. So have they been decreasing number of shares? Let's quickly look through this.
And one more thing, Roshan, like how about the market cap here? Like it's already a large cap, right? And you mentioned it has to be small to mid cap.
It's not really a problem. We are maybe deviating a little bit, but it plays to the diversity of ideas too, right? We all know that large caps have not been in favor at the moment with the market. So maybe we'll take that into account and say, okay, maybe I'm not going to buy it now. I wait a little bit. Maybe I get this even cheaper. But the story has to be ready for you, right? You have to have your thesis in play. Maybe you wait for another quarter to confirm your story. And then you play this probably on a slightly longer time horizon. So instead of, let's say, 6 weeks, you maybe give it 10 to 12 weeks, just because you know that these types of stories might take a little bit more time for the market to appreciate it. Make sense?
Yes, makes sense.
So one thing I wanted to know was, so I wanted to figure out, let's look at the margins. So gross profit, it's definitely gone up, right? So this is likely to be, it's probably linked to raw material pricing. We just need to dig deeper. I don't have the answer now, but the story is being driven by increasing margins and not decreasing number of shares. That's basically what I'm seeing at the moment, right? So this is one thing I wanted to validate. Maybe I can go further and look at the balance sheet or income statement. That should have it. Net income. Okay, this is not helpful. No, I don't think it's in this. I'm basically trying to look for number of outstanding shares across the whole time period. It must be somewhere. It's okay. There it is. So, weighted average shares outstanding. It's been relatively flat. So, the earnings growth is down to improving margins. We just need to go one level deeper to understand what cause margins to improve. Will they improve even more? And if you add a slightly higher revenue growth to that, I think it's like putting fuel on fire. Actually, this is an idea I'm going to look into. Go ahead.
Sorry, I have a question. How would the outstanding average amount of shares impact the profitability?
It wouldn't, but what I was seeing in the chart was an expectation for higher EPS, right? EPS is earnings per share. So it's net income divided by average number of outstanding shares, right? So I wanted to know whether EPS rising is due to earnings increasing by virtue of margins improving, or whether it's the denominator decreasing in value because these guys are doing buybacks, right?
Yeah.
So it's basically, I'm basically looking at this in this manner because I'm kind of cutting corners, right? I'm just looking at a chart and establishing a few scenarios and then ruling a few out by digging deeper into the numbers. Typically, you maybe would do it slightly differently, but because I want to do it very quickly and just get the story out, understand exactly what's moving the stock here and what could be potential catalysts for us, I'm kind of taking a bit of a shortcut approach here. So I think this is something I'm going to look into a bit more because it might not just be beverage products that give a tailwind to this company. It could be aluminum pricing going lower. It could be maybe Trump comes in and then the container and packaging space will improve as the goods economy gets a bit more confidence and improves. So there could be a lot of good things that could unfold for this company. I'm just trying to see the pricing for aluminum. Okay, so it's on the rise, which I think bodes well for us because even in the midst of aluminum pricing rising, these guys are able to improve their margins. That's a good sign from my perspective. Okay, but as I say, we have to look at it properly and dissect through the different segments of the companies and, figure it out professionally from a trade idea generation template perspective. Okay, I'm probably going to stop here if we don't have anything else. If you want me to look at something else, more than happy.